Well, hey, everyone. Hope you're having a great day out there as usual. My name is Warren Howe. And if you don't know me, I'm a full-time investor. I'm one of the coaches in, Jeremy's awesome financial fortress. I also go live every week. Yep. Every Friday, 5 p.m. PST, same time now. And, from time to time, I talk about the market. From time to time, I talk about, uh, what's happening and what are the market updates, what are the companies. We talk about financials, a lot of fun stuff. So today, oh, by the way, guys, before I forget, let me share my screen. Yeah, before I forget, guys, you show a brother some love, right? Show a brother some love. Smash that like button, smash that heart button. We'd be very appreciative if you do, because we want to spread the algorithms. This Facebook group is getting bigger and bigger. Right now, we have, I think, close to 8,000 people. It's insane. So again, from time to time, I'll have posts every week on Facebook, little dropping little gems here and there on what's happening in the market. What should we do? Maybe touch on a little bit of mindset, which I think is really crucial right now. At these times, right? It's a little shaky. So I did an update on the market last week, right? If you can check it out, please do. And again, smash, if you are watching this live right now, click, smash that like button and click hashtag live, just so that I know that you guys are here, just so that I know that you guys are actually watching, you're interacting. You got any questions, I'll attend to, no problem. And also there's a huge update that I want to announce, something very exciting. So on the 17th onwards, right, of December, which is next week, I will be starting a public, what we call public account, right? Or what is called, sorry, I forgot the name. It's, building a long-term portfolio from scratch, right? That's the name of the portfolio, right? So I would like to call it, actually, let's call it Freedom Fund, right? Let's call it the Freedom Fund, because this is exactly what I personally do when I want to, when I started off my journey. I preach the idea of earn our money, save our money, invest the money, and reinvest. That's the beauty of, growing our net worth. So when we want to grow our net worth, it's not all about just, stocks, right? It's not all just about how much we can earn. It's about everything is interrelated. So how much you earn a month, your monthly cash inflow, you must make sure. I mean, we cannot be just focusing on stocks too much and not focusing on our, monthly cash inflow. Because for those of you that are actually 100% long-term investors, and please smash that comment and say long-term investor, if so, just so that I know you're 100%, right? If you're a mix, which is a bit of a trading swing trading, part-time trader or whatnot, maybe a 30% trader, 70%, investor, let me know. All right, smash it in the comments. But what I'm trying to say is there's something really exciting that's happening next week. I'll be opening up my account, a fresh account from scratch, which I think is really cool. So what's going to happen is I'm going to put in maybe 1,000 USD. Okay. So I'm going to preach basically what I do in the stock market, which is earn our money, save it, invest, reinvest with my own money. And, again, I'm trying to find what brokerage to actually open. If you guys have any recommendations, let me know. Currently, I use IBKR, which, interactive brokers. So yeah, maybe I'll create a sub account in my IBKR and, maybe you can see it from there. But, anyway, regardless of that, the whole point of it is to actually literally, put my money where my mouth is, right? I've been preaching stuff like SoFi. I've been preaching stuff like Tesla. I've been preaching, companies. Today we're going to talk about Lemonade, but, not really Lemonade, but yeah. What I'm trying to say is we literally talk about all these stocks. We're going to talk about what is my thought process on why did I buy, right? I'm going to talk about obviously why did I reserve my cash position this way? And I'm also going to talk about portfolio blueprint, right? I'm going to talk about portfolio blueprint, portfolio strategy, because I mean we found out that on average, right, not really a true statistic, but on average maybe a household income could be maybe close to 2,000 a month, right, for folks out there, and maybe their net worth is from 10,000 to 50,000. So we decided to actually keep it small, right? The purpose of this project is because we want to show you guys that, hey, uh, we want to take care of you guys. I mean, everyone else, because we want to look at the little guys, right? We want to look at. It doesn't matter if you have a big portfolio. It doesn't matter if you have a small portfolio. All it takes is hard work. All it takes is seriously, focusing on growing your net worth. All it takes is to, it's not only just because of stocks, right? We need a good side hustle. We need to keep hustling out there. Like, I'm not gonna lie. Today, I wanted to talk about entrepreneurship and building cash position, which is actually relative to what I'm talking about. But I decided to actually do a little snippet on Lemonade, right? But yeah, very exciting project again. I will be putting in my own my own monthly cash into the account, just so that and I'll reveal all of this, steps that I make in this account. We can call it a public account, but let's call it Freedom Fund, right? It's something cool. Freedom Fund with Coach Warren, right? So yeah. And by the way, I Coach Beatrice will be giving an update on, I think, Voyager quarter call. She's a registered CPA, CFA, sorry. CPA, right? Sorry. And she's, if you guys are interested to be joining the private group, there'll be a 7-day free trial, right? And like we always been saying, every different coaches will go live every week on the private group. I just recently this is my week, right? This week I was actually doing on Lemonade. That's why I can actually share with you, the summary. And later after this live, I'll be going live in a private group to be talking about back on the envelope valuation for Lemonade. So again, if you're interested to join, just hit up. I think maybe Andre can reach out to you, or anyone in the Financial Fortress team. So yeah, it'll be very exciting stuff. So hope to see you guys there, and I'll be giving an update on my portfolio and whatnot. Okay. So quick look at anyone who has given any comments. No. Again, guys, if you're watching this right now, appreciate if you smash that like button, smash that heart button, so show brother some love. Yeah. Now we're gonna dive into Lemonade today. So again, this is exactly the stock. I haven't looked at this stock before, and until Tuesday, where I started off my face off Friday, and but I noticed this stock is actually very known in the market. A lot of I'm pretty sure Wall Street bets talk about it, millennials talk about it, Gen Y, Gen Z. It's a growth stock, right? So okay, that's quite a cool name too, right? I mean, we got Lemonade. It's a very sexy website that I see. So let's talk a little bit about that, right? I'm going to go through, not everything, but I'll go through, the highlights maybe, or the qualitative analysis, the quantitative analysis, and we can judge ourselves again. So again, I'm not a financial advisor, right? I'm not your financial advisor. I do not know your risk tolerance. Please do not take this as a buy call or sell call, because to be frank, don't let me influence you in terms of a bearish sentiment or bullish sentiment, because I can be at times. I'll give my own feedback, right? I'm very straight. I give my feedback whether I love it, I don't. I'll actually voice out, it is what it is. So right now, let's dig into Lemonade. And what I'm seeing is the website, okay? Lemonade homeowners and whatnot. And let's see. Let's go to homepage, right? So forget everything you know about insurance. So I want to explain a little bit about insurance, especially in my country. Okay. A majority of the people, there's like a negative vibe when it comes to insurance. Why is that? We have insurance agents coming out, right? And I mean, I can't blame. I mean, we can't blame them. They are obviously they're making a living, right? They want to sell us something, but I'm trying to talk about the majority vibe, the good and the bad, right, of insurance now. And also sharing a little culture with you guys here in Malaysia. So in Malaysia, it's insurance is important, whether we like it or not, right? It's the smartest invention that is ever created. I mean, There's this, it's driven by statistics. It's driven by actual scientists at the back of the, the the company, right? Calculating shit and working out whether or not what's the probability of, what is the mortality rate, what is the probability of this house getting burned down at this neighborhood. There's a lot of data involved, right? There's a lot of machine learning involved if you were to actually revolutionize or disrupt this space, right? But so whether we like it or not, and actual scientists, actual actuaries are really expensive, right? Really, really fucking expensive. So why am I bringing this out is because we want to understand the insurance industry overall, right? Now, if you guys know some color in your country, right? Europe, I don't know where you from, France, Europe, America, let me know, right? Let me know how's the insurance sort of vibe in your country. Is it similar to what it is in Malaysia? So how it is in Malaysia, for my opinion, is that okay, when you look at insurance agents, people think, okay, negative vibe, go away from me, right? You're selling me something. That's one of it. Number two is that boomers, right? Boomers, we got old people. Now, boomers can be very stubborn at times, okay? Very stubborn at times. So what happens is that they do not want to go health checkup, right? And because they think that they're fine. But suddenly, something happens to their body, something happens to their health, and something bad, really bad happens. So who's going to suffer if they are not covered by insurance, right? So who's going to suffer? Their kids are going to suffer, right? The kids are going to suffer. Then they're already, working their day job, earning probably 3,000 ringgit, which is like 900, USD a month, but not even being able to take care of themselves, and got to take care of them. So what is the result of that? The result of that is basically poor advice from either insurance agents, or maybe maybe it's not they are not educated enough, right, about insurance. That I mean, whether we like it or not, we have to buy insurance in case something happens to us, because there's so many things that can kill us, right? In the world, we're so fragile. We need insurance. Now, I'm going to talk a little bit about that segment, because I think it's important to how Lemonade is going to solve that problem, right? So, and I'm going to give you, a real life story about my uncle. My uncle, it's a very sad story. He had cancer. He got advised by a wrong insurance agent. Fucked up, right? Really fucked up situation. So, wrong insurance plan, wrong advice. When he got cancer, suddenly, oh, he can't claim this, he can't claim that. Like, oh, the kids, my cousin was panicking, right? A lot of money involved. So at the end of the day, they had to pay themselves, like a treatment in um Guangzhou, not mistaken. It's around 300,000 ringgit, which is close to 100,000 USD. It's a lot of money, right? But that would have been covered if they were insured properly. So this is a learning lesson for me, right? Being a breadwinner, and maybe for you guys to be really insured. Now, I'm no insurance agent, right? But it's good to have probably 10% of our income saved up on insurance, to pay off premiums for your family, or maybe even 15 or 20%. It depends, right? So I'm going to get insured on 1 million ringgit, which is, not too bad. But then again, this is how I choose, right? So this is the vibe around insurance. Now, I think this is important, because if I see, like, this is a problem here in Malaysia, and I'm not sure about Europe, I'm not sure about US, right? So again, if you guys know, please, put in the chats. But the reason why I'm actually saying that, because this is a real life problem, right? These are problems that, not educated enough, okay? I'm actually pitching for Lemonade. These are the real life problems, right? So, every time you go to a business pitch, you talk about problem, you talk about solution, you talk about value proposition, and boom, right? Buy my product. But anyway, I'm not invested in Lemonade, but I see a good fit, because, like, okay, lack of education, right? Around Malaysia is a third world country, so maybe we fucked up, right? Maybe we're slower than others, but that's one of it. The other thing is that we are dependent on insurance agents. You know what I mean? We depend on a good advice. This package, that package, but this is not relevant. I mean, we a good company should be able to tell the consumer, hey, we got you covered. right? We got you covered in a way of this, 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 this. Now I know insurance is subjective because there's a lot of things that they might be false claims. There might be a lot of, that's why the AI, that's where AI comes in, right? To be reading data, to be more sufficient, to be learning themselves. But what I'm trying to say is these are the real life problems, right? It's probably 2 or 3 problems, which is huge, massive. And I'm trying to figure out are they solving a big enough problem that is relevant to the world, right? That is worth solving. And I see it as a huge fit. Maybe this only happens to me, but I'm pretty darn sure that a lot of people around the world are actually suffering from these problems. Now, when I see this and I look at Lemonade, I'm thinking, holy shit, like this is a good product market fit, right? This is these are the questions that we should be asking ourselves, right? Good product market fit, growing consumption in the future, catering to a proper target market. Now, boomers, let's face it, right? Boomers are not going to be using this product. But anyway, let's dig in. Okay, sorry. So I took some time to list out the problems. Now we want to find out whether or not they are solving these problems, right? So Lemonade, forget everything you know about insurance. This tells me that okay, maybe they want to disrupt something. You know what? They're trying to tell us that they are not they're an insurance company, but let's not talk about insurance. Let's talk about your well-being, right? So maybe this tells me that they're customer centric. And I did my research already, right? We had 3 days of research, and today's the last day, which is a recap. I'm going to give my conclusion later. But yeah, instant everything, incredible prices, big heart, right? So check out, I can't check my price because, I'm not from the US and their geographical standpoint is from US, Europe. It's not here in Malaysia yet. So anyway, so the almost 5-star insurance company, 4.9 stars. Now I read through all these, like these are really good, right? But also, that's the good thing about having a community, right? So a community in Jeremy's private group, which is awesome. I asked everyone there, 30, 50 people joining the live, and I said, anyone here that has been buying Lemonade insurance, let me know because we want to get some local color on how is the experience. Now, sad to say that there were 50% that were good, and 50% that were bad. Now, the good was more focused on selective. That means they are convenient, fast, right? So they could actually settle and this is exactly what Lemonade is preaching, right? You want to buy and you want to get quoted on a premium, you can get it like that, right? So instead of the traditional way of insurance agents, like you are literally talking to the AI, which is in their case AI Maya, and the one who settles claims, something like that, is AI Jim. So they name their AIs. Okay, wow. So AI Maya and AI Jim, they tackle all the full on, and they're member centric, right? So it's all within the app. That's the way they sell, distribute, right? So that's the good thing. The good things are that they're fast, they're selective, convenient. It's cheaper for some products. Now the other 50% are telling me that hey, I compared my homeowner's insurance, and it was 5 times more expensive. Lemonade was 5 times more expensive. I was like, wait, what? Five times is insane. 5 times is crazy. How the heck can you be, competitive being 5 times more expensive than the legacy insurance companies, right? So this was a problem because if we look at Lemonade, right, they are competing against legacy insurance banks, right, insurance companies. And we all know that insurance companies, we got Geico, which is Warren Buffett's baby. They already have dominant market share, right? So when I look at that, I'm like thinking, okay, it's a problem that they cannot solve this and be consistent with that. Because if they lose out, like whether we like it or not, this comes first, right? I don't care what it is. Okay, convenient is good, right? Convenient is great. But whether if you want to capture the boomer market, you want to have more market share, this will definitely come first. Because if it comparing with your app, right, Lemonade app versus legacy, if it takes like 2 hours more to be on a legacy, but like 5 times cheaper, might as well go the legacy, right? So instant everything, which is great, incredible prices. If they cannot keep up with these incredible prices, then they're going to lose market share for sure. And this is actually, I do believe that because of their performance. Now we're going to go through that a little bit. Big Heart. Okay, so Big Heart, what do they do? Basically, with the surplus premium that they collect, they actually, philanthropy, right? Put it to charity, donate out. Now, as an investor, and this is the same as Dutch Brothers. I don't know why I'm researching companies that are actually very good in donation. Because as an investor, I'm thinking, hey, you're losing net income, you're a negative EBITDA, operating income wise. Why? I mean, it's great that you're donating to charity, but please save your money and use that money to grow. You know what I mean? So, I mean, that's one of them, right? That's one of it as an investor. So, Instant Everything Maya, our charming artificial intelligence bot, 90 seconds to get insured, done. 3 minutes to get paid. Now, this is the value prop, which is very strong. So, when I look at the website, I fell in love with the website, to be frank, right? To be very frank, I mean, already insured will help you switch. 31% assurance farmers home site. They have, quite good statistics here. Basically, people who use Geico and using, Lemonade, less likely they're going to use 10% is not going to Geico anymore and using more to Lemonade, right? So check prices and switch. So they got some interesting stats here, and being able to replace Geico is actually, it says something, right? Geico is a huge giant, right? This is the cash cow for Warren Buffett. But so how Lemonade works reverses the traditional insurance model. We treat the premiums you pay as if it's your money, not ours. With Lemonade, everything becomes simple. So what do I mean by that? Is basically they sort of refund you back like in excess premium. Now I didn't really get that aspect, but it's similar, it's somewhere there, right? Why I don't get that aspect is because when I get quoted and when I bought my life insurance, I'm paying for, let's say some insured 1 million, right? Let's say I pay 4,000 ringgit, which is close to 1,000 USD for the year. That is my premium. So I don't get what they mean by, excess premium, but it's around there. Maybe it's different how it works in US, but then again, this is the system, right? So with Eliminate, everything becomes simple and transparent. We take a flat fee, pay claims super fast, and give back what's left to causes you care about. So causes meaning they, give it to charity and whatnot. So okay, that's fine, that's cool. They've been, working on with big they're going out to good charities like Human Society, Trevor Project, blah blah blah. Social impact, yeah. So this is them, right? So they have renters insurance. Basically, if you are looking to rent a home, you can buy their insurance. Now they are charging $5 a month, starting from now. Obviously, if you want to check your price, you need to assess. They'll assess you, right? Top down, where you live and all that. Where's the property and whatnot, right? So they will assess your age and all that. But this is how they attract you, right? $5 a month. Okay. So you're probably thinking, okay, what can we read from the story? What is the story that Lemonade is trying to tell me right now? Right? $5 a month, renters insurance. So this, my opinion, is like top of the funnel. Top of the funnel to tell us that, okay, uh, we want to, hook you in. We want to entice you right now from $5 a month. Yeah. And say, okay, once you're hooked in, you get a better job. When your income grows and you can be a homeowner, that's where they want to be sticky, and that's where the churn rate decreases and retention rate increases, right? So what happens is, okay, from that top of the funnel, they want to entice you in and maybe get on to buy insurance from Lemonade itself, from being a homeowner, right? So homeowner is where, in my opinion, their profits actually they get the chunk at the gist of it, right? So if you want to compare all the products of insurance, I would say homeowners is more of them. Why? Getting insured on a house is more better. Why? Because it's less likely that your house will get burned down, right? We'll get, so that's why we have to understand the industry. What are the metrics, right? What are the metrics of this industry? We have to actually understand how do they earn money and how do they, potentially lose money. So if a lot of, like, seriously, if there are a lot of claims out there, obviously then we will know that this company is going to go bankrupt. I mean, because there are more claims than how much they are paying premium. But that's why statistics comes in, that's why actuaries comes in, right? But instead of, so you can sort of read the story right now. Instead of hiring actuaries, they're actually very dependent on machine learning and AI, which is a good thing, right? It decreases the OPEX, operating expenses, and hopefully they can scale in a way that increases the revenue, right? So that's the story that I get with Lemonade so far. Yeah, so zero hassle, great prices, trusted by your lender. Now, guys, again, if you are investing in Lemonade, let me know, right? Put in the chats, put in the comments. I don't know, maybe we can actually have a good conversation. Anyway, so ranked number one in America, second year in a row. Lemonade was voted the most loved insurance in America by Super Money Forbes. Okay, so it's cool. I mean, one less headache when closing on a new home. Everything's instant. So this is their value prop. I mean, the value prop is very simple. AI bots, everything instant, speak with our team, everything that the problems that I listed just now that I'm facing in Malaysia, they can solve it. So if you ask me if I want Lemonade in Malaysia, heck yeah, I do. But if your quotation, because we Asians, we Malaysians we are fucking thrifty, okay? Let's put it a better word. We are fucking stingy. So it's all about the money, right? It's all about the money. I don't care about convenience. But obviously, there's a different case when we talk about millennials. There's a different case when we talk about Gen Y, Gen Z. I mean, I would say Gen Y, Gen Z. Millennials will still talk about money. But end of the day, we need to have a very competitive premium. So if they are competing against premium, whether we like it or not, they're still fighting against legacy banks in a way, right? But then again, the AI, if it's self-sufficient and the machine learning can actually be, improving faster, that will be a huge compounding effect over the long, long run. Okay, so that's a little bit of qualitative. Now I'm gonna dive through now very quickly on the 10Q, right, which is financial information. So here we go. We got the balance sheet. Okay. So fixed maturities available for sale, 698 million, right? That means they have cash in the bank worth 1.1 billion. So how did I get that? Basically, the money in fixed maturities, which is 697 million, short-term investments, right, 107 million, and cash in the bank at 390 million. So accumulated, knowing the size of this company, having a balance sheet of 1.1 billion is very healthy, right? So you're probably thinking, wait, if they're losing money, which they are, which I'll get to a bit, how the heck are they getting all that cash, right? So later we'll see the cash flows and we'll know. But by the way, bear in mind, we have to assess for this type of industry because there'll be, what they call LAEs, right? Loss audit. No, I forgot the term. It was uh, it's a term that basically says covering on the sum insured, right? These are called losses. So if let's say the losses, I forgot the term. Sorry, it's LAE, right? If let's say, I think it's loss adjusted expense, right? So basically, if they were to have more claims than how much they can collect as premiums, which is their revenues, then it'll be a huge problem for this company or this industry, right? That we have to assess, and that is why they need very liquid cash, right, to be able to pay for these claims because worst come to worst, one shot. And this is a business which is literally dependent on how bad the weather is. You see that, guys? The risk here is literally dependent on how bad the weather is. Now, there are natural disasters in US, and they also have seasonality. Seasonality tells them that in the third quarter, they'll most likely have a better time on revenues, right? But also more spending. So they highlighted this, right? It's all about digging the 10Ks and whatnot. But yeah, we need to take that into consideration, whether or not the LAEs are actually a lot in relation to how much cash they have and how much runway do they have, right? So premium receivable, which is basically the accounts receivable, reinsurance recoverable, prepaid reinsurance premium. Basically, these are the premiums that I can actually collect, but haven't collected yet. So puts their total assets at 1.5 billion. Yep. So looking at their liabilities is actually very doable. It's very payable, right? Unearned premium, which is more like deferred revenues. Yeah. So total liabilities of 473 mil. I mean, what do you guys think, right? Let me know in the comments. If you minus this off, and nothing is here is about goodwill, so that's good, right? You got 1.1 surplus, or maybe close to 1 billion in surplus. That's a good sign, right? Good balance sheet. But when we come to the revenues, right? Look at the income statement here. So in this 10Q, the latest quarter, we got revenues of 51 mil for net earned premium. Now, obviously, I won't go. We don't have enough time to go through each type of ways they're earning money. So I did this with Face Off Fridays and for the private group. But this basically tells us, how they earn money in terms of their premium. They're actually depending on third-party income from insurance. They combine with to lower, risks, leverage, and also get a commission off that. So this is how they earn money. And total revenues for 9 months is 87 million. So this is a very small company, very, very small company, right? But looking at the expense though, check it out. Expenses from sales and marketing, 100% increase from 2020, but the revenues only increased by 13% from 2020. Now, people talk about, growth company. Like, what is your definition of a growth stock? Let me know in the comments, right? What is your definition of growth stock? Because if we are talking about a growth stock and if we are talking about fucking 13% in increase in revenues, now is that a growth stock? It's more like a growth OPEX stock, right? I mean, 100% increase in sales and marketing, but 13% increase in revenues. Now that is not very exciting, right? That is not very exciting. So, in one of the posts I put there, and one of the members actually asked a great question, right? She asked, would you stop researching on a company that is losing money? So I wouldn't stop researching. I would depend more on the qualitative analysis, right? So that's why I'm going through with you, the website. I'm going through with you like what are the problems that they're solving. These are stuff that I researched. That's why I can, I'm able to talk to you about it. But when I look at the financials in this case, now I have to assess how much of my money that I want to put in this stock if I were to, invest in them, right? So this keeps us thinking. Like the numbers don't tell the whole story, but in this case, what's important is what we call path to profitability. If we see that path to profitability is seriously 10 years down the road, right? If we want to project, because I mean, let's face it, we are not pegging a 40% revenue increase. We are pegging a 13% revenue increase quarter. I mean, 3/4 over quarter, right? Year over year. Now that is something to worry about. But if they were to have, 40%, 50%, or even 100%, now I would give them a chance for sure, right? Because they are a growth company. Whether we like it or not, they are losing EBIT, right? Losing operating income. They're losing money net income wise, of course, right? So your revenues will have your revenue growth potential will have to be smashing that, right? So I look at sales and marketing. I look at G&A, which is not really increasing a lot, which is good. But the total OPEX, right, will bring it to 252. That means their operating income or loss will be negative 165 million. Now, negative 165 million is small compared to how much cash they have in the bank. I mean, total cash. But still, I mean, how long can you continue to burn your money, right? You will have to increase your revenues like crazy. And I mean, sad to say, you're not really doing that. So I gave them a chance some more to go through the recent quarter, right? Because I want to know what the CEO is actually telling us in terms of their marketing strategy, right? So these are things that we have to know. Now, again, is Lemonade a buy for you guys? Is it not a buy? Let me know in the comments, right? This is why we're here today. So we looked at this. Now the cash flow, I'm going to jump into the cash flow before I end this call. We have obviously negative, they're losing money. If we add everything back, right? Adding everything that they receive, they will have, instead of 100, negative 171 million, they'll have a negative 94 million in operating cash flow. Now, if we deduct their purchase of property and equipment, which is their capex, they would have a negative 110 million in free cash flow. Okay, so we can see that their investing activities, basically their short-term investments, cost of bonds, they're basically investing a majority of their income, which they highlighted as interest income, in banks, right? In bonds, right? They can actually get, interest on that. So this is the chunk of how much they're actually putting in, right? Investments are actually more to bonds and safer assets. Okay. So financing is more to, so this is why they can get more cash, right? Proceeds from IPO and follow-on offering, net of underwriting discounts and commissions. So this is where the bigger chunk, which is a, form of financing, which is a form of debt. This is how they raise money. That's why they can have so much cash. Yeah. So, okay, this is the cash flow. Now, everything will be bad in terms of cash flow if, let's say, the operating cash flow is negative in the first place, right? So that's why the story of this company, where they will have to increase, obviously, in revenues like mad to have positive operating income. I don't care if net loss is net loss, right? Growth companies net loss, but EBIT negative, that's a problem, right? That's a problem. Now that I can still give chance on that, but I that's like another layer, right? Although it's already a red flag, but another layer that I cannot stand is, your revenues must be really high to prove that, you're worth investing in the first place. Now, that's all the time we have today, but hopefully you guys got some value out of this, right? We are looking at, lemonade, we're talking about insurance, we're talking about thought process. When we look at industries, we look at, the balance sheet. Yeah, so is lemonade a buy for you guys? I'm not sure. For me, I'm just gonna hold. I seriously deem that their valuations are too crazy in relation to how much they can have. So that's just me, guys. Stay well in the markets. Catch you next week, and hopefully you guys stay strong in, these volatile times. Yep, keep cash. So I'll see you again, and I'll see you guys again next week. Thanks, guys. Bye bye.